Robinhood surprised everyone. The company, known for its trading app, just had a big win. Their latest earnings report, released on August 9, 2023, sent shockwaves through the market. The stock soared 10% in after-hours trading. What caused this sudden surge? Robinhood beat expectations, and they beat them soundly. Investors were caught off guard. Robinhood had been struggling. The market for tech stocks was in turmoil. Yet, Robinhood emerged from the chaos with a story of resilience. This wasn't just a small victory. This was a sign that Robinhood might just have figured out how to win. Robinhood, a company that has always been at the forefront of democratizing finance, has had its fair share of ups and downs. From its inception, it aimed to make trading accessible to everyone, not just the elite. Over the years, it faced numerous challenges, from regulatory scrutiny to market volatility. But this time, the company seems to have turned a corner. The latest earnings report was a testament to their resilience and strategic planning. Analysts had predicted a modest performance, but Robinhood exceeded all expectations. The report highlighted significant growth in user engagement, increased trading volumes, and a surge in new account signups. This was a clear indication that the company's efforts to innovate and adapt were paying off. The 10% jump in after-hours trading was not just a fluke. It was a reflection of investor confidence in Robinhood's future. The market responded positively to the company's strong performance, and the stock price surged as a result. This was a moment of validation for Robinhood and its supporters. But what exactly drove this sudden surge? Several factors contributed to Robinhood's success. Firstly, the company had made significant improvements to its platform, enhancing user experience and adding new features. Secondly, they had expanded their product offerings, including the introduction of new investment options and educational resources for users. These initiatives helped attract a broader audience and retain existing users. Additionally, Robinhood's marketing campaigns had been highly effective in reaching potential customers. Their efforts to build a strong brand and connect with the younger generation of investors were clearly paying off. The company's ability to adapt to changing market conditions and stay ahead of the competition was commendable. It's important to remember that Robinhood's journey hasn't been without its challenges. The company faced significant hurdles, including technical glitches, regulatory investigations, and public criticism. There were times when it seemed like Robinhood might not recover, but the company's leadership remained steadfast, focusing on long-term growth and sustainability. The broader market for tech stocks was also experiencing turmoil. Many tech companies were struggling to maintain their valuations amidst economic uncertainty and changing consumer behavior. Robinhood was no exception. However, the company's ability to navigate these challenges and come out stronger on the other side is a testament to its resilience and strategic vision. Robinhood's story is one of resilience and determination. Despite the odds, the company managed to turn things around and achieve a significant victory. This success is not just about financial performance. It's about proving that Robinhood can adapt, innovate, and thrive in a competitive market. This wasn't just a small victory. It was a major milestone that signaled a new chapter for Robinhood. The company's ability to exceed expectations and deliver strong results has renewed investor confidence and set the stage for future growth. As Robinhood continues to innovate and expand its offerings, it will be interesting to see how the company evolves. This recent success is a promising sign that Robinhood might just have figured out how to win in the long run. The future looks bright for this trailblazing company. Analysts had predicted a loss for Robinhood. The financial landscape was fraught with uncertainty, and many experts were skeptical about the company's ability to navigate through the turbulent waters. The consensus among Wall Street analysts was grim. They had crunched the numbers, analyzed the market trends, and concluded that Robinhood was on a downward trajectory. The expectation was that the company would post a 4-cent loss per share, a figure that loomed large over investor sentiment. They expected the company to post a 4-cent loss per share. This projection was based on a myriad of factors, including market volatility, regulatory challenges, and competitive pressures. The analysts had left no stone unturned in their assessment. They had pored over financial documents, scrutinized earnings reports, and engaged in heated discussions about the company's future. The consensus was clear. Robinhood was in for a tough quarter. They were wrong. Robinhood reported a loss of just 1 cent per share. This unexpected result sent shockwaves through the financial community. The analysts, who had been so confident in their predictions, were left scrambling to understand what had gone wrong. How had they missed the mark by such a wide margin? The answer lay in Robinhood's ability to adapt and innovate in the face of adversity. The company's strategic decisions had paid off, leading to a much smaller loss than anticipated. This wasn't just a small beat, it was a significant outperformance. The difference between a 4-cent loss and a 1-cent loss might seem minor, but in the world of finance, it was monumental. It signaled that Robinhood was not only surviving, but thriving. The company's ability to outperform expectations in such a challenging environment was a testament to its resilience and strategic acumen. Investors took notice and the stock market responded with enthusiasm. Revenue told a similar story. Analysts had projected revenue of $473 million. This figure was based on a detailed analysis of the company's past performance, market conditions, and growth potential. The analysts had used sophisticated models to arrive at this projection, and they were confident in their numbers. However, Robinhood had other plans. The company's innovative approach to customer acquisition and retention had paid off in a big way. Robinhood shattered that estimate, bringing in $486 million. This was a remarkable achievement, especially in a market that was anything but stable. The company's ability to exceed revenue expectations by such a wide margin was a clear indication that it was on the right track. The financial community was abuzz with talk of Robinhood's success, and the company's leadership team was lauded for their strategic vision and execution. The company had defied the odds. In a challenging market, they had found a way to grow. This was no small feat. It required a combination of innovative thinking, strategic planning, and flawless execution. Robinhood's ability to navigate through the complexities of the financial landscape and come out on top was a story of resilience and determination. As the company celebrated its success, it also set the stage for future growth and continued outperformance. The numbers painted a clear picture. Robinhood was on the upswing. But what was driving this positive momentum? The answer lay in two key factors: net interest revenues and trading activities. These two factors were the engines of Robinhood's success. They represented a shift in the company's strategy. Robinhood was no longer solely reliant on a booming stock market. They were diversifying their revenue streams, and it was paying off. Net interest revenues had become a significant contributor to Robinhood's bottom line. As interest rates rose, Robinhood capitalized on the opportunity. They put their customers' cash to work, earning interest income in the process. This strategy was simple but effective. It provided Robinhood with a steady stream of income regardless of market volatility. It was a cushion, protecting them from the ups and downs of the stock market. Section 5. Trading picks up. The second driver of Robinhood's success was the resurgence in trading activity. After a period of decline, investors were returning to the market, and Robinhood was there to meet them. The company's user-friendly platform and commission-free trading model appealed to a new generation of investors. These investors were eager to put their money to work, and Robinhood provided them with the tools to do so. Section 6. Analysts Weigh In. Analysts were impressed by Robinhood's performance. They praised the company's ability to navigate a difficult market environment. They acknowledged the success of Robinhood's strategic shift. Robinhood has done a commendable job in adapting to the changing market dynamics, said one analyst. Their focus on net interest revenues and their success in attracting active traders have been key to their turnaround. Section 7. Navigating a difficult market. Robinhood's success was even more impressive given the challenging market backdrop. Interest rates were rising, inflation was high, and the economy was slowing. Yet, Robinhood found a way to thrive. This was a testament to the company's resilience and adaptability. They didn't just weather the storm. They found opportunities in the chaos. They proved that they could succeed even when the odds were stacked against them. Section 8. The road ahead. Robinhood's earnings surprise sent a clear message to the market. They were here to stay. They had overcome adversity and emerged stronger. The future looked bright for the company. But challenges remained. The market was still volatile, competition was fierce. Robinhood would need to continue to innovate and adapt to maintain its momentum. Section 9. A sign of things to come? Robinhood's earnings surprise was a welcome development in a turbulent market. The financial world had been holding its breath, waiting for a sign that the relentless downward spiral might finally be coming to an end. Investors, analysts, and everyday traders alike were all searching for a beacon of hope amidst the chaos. And then, seemingly out of nowhere, Robinhood delivered. It was a sign that perhaps the worst was over. The positive earnings report suggested that the company had not only weathered the storm, but had found a way to thrive in it. This was more than just a financial statement. It was a symbol of resilience and adaptability in the face of adversity. Could this be the beginning of a broader market recovery? Only time would tell. Analysts began to speculate, cautiously optimistic that this could mark the start of a new upward trend. The markets are notoriously unpredictable, but this development injected a much-needed dose of optimism into the financial ecosystem. But for now, Robinhood's success offered a glimmer of hope. It was a reminder that even in the most challenging times, there are opportunities to be found. Investors who had been on the sidelines began to reconsider their positions, inspired by the possibility of a turnaround. It was a reminder that even in the darkest of times, opportunity awaits those who are bold enough to seize it. The story of Robinhood's unexpected success serves as a testament to the power of perseverance and the potential for recovery, even when the outlook seems bleak. As we move forward, this moment will be remembered as a pivotal point, a sign of things to come.